Yeah. All right. So what I'm gonna do is I'm gonna bring up my we're live. I see it right there. It says live.
Yep, we live.
That's awesome. We're doing
So
it.
so we on there.
All right.
Let me set up my other screen here. So okay, cool, man. So what's up, everybody? Welcome to the channel, man. I'm here with my boy, my friend, the stock trader, Mr. V, Mr. Money V. So be sure to check out his channel, guys. I have a link in the description below. But this week has been like the craziest week, man. Like I've never seen anything as crazy as this. Like it's just crazy, man. Like this is historical, but I think it's the beginning of something, bro. Like,
Well, personally, I think like it just open the curtains and people can actually see what Wall Street is like. And I don't think when you see something, you can't unsee it because you've seen it already. I don't care if you close your eyes, it's gonna be in your memory forever. So it is a revolution. So I hope that a lot of people are not just jumping in and thinking like I just want to make some quick money because they say, oh, the stock is just going up and not stopping. I want people to actually take the opportunity to learn and understand what's behind the stock market, who's in control, and how their manipulation can actually work against you. And so it should be, yeah, if you're making money, good. On top of that, a learning opportunity. So yeah, it's been a crazy week, and I think it's going to carry into next week too. It's not done yet.
yeah, I don't think so either. Like I was looking at this, I was looking at this meme on Reddit. Hold on, let me pull it real quick before we really get into the discussion. Like this meme had me dying. Like it's crazy.
Yeah, I want to see it.
So you see it?
Yep.
So this meme right here is like we lost 70 billion, and then we lost 70 billion so far. Yo, like that's crazy, man. Like what it says is that people are like really understanding that for the first time ever that they can take advantage of this quote unquote free market and actually, put the big boys in the bad spot. Because one of the things I don't think a lot of people understand. So people are seeing this for the first time.
Mm-hmm.
I don't think they understand like this stuff happens all the time within the stock market. Like this is how hedge funds and how big companies make money, period. Like they make this type of money because they don't make money from finding a good investment and the stock going up.
Mm-hmm.
They make money from pretty much shorting and trading and doing other tricks of the trade around trading because that's faster money.
Yeah.
Versus like what most people may think happens, that's not what happens. So they do this stuff over and over and over and over again.
Well, that's been their strategy. And the thing is, these people have access to media. So if you want to short a stock, and then you go on media, and they got your own TV shows, and they talk about it. It's like, oh, I'm selling this stock. I mean, if you think back, last year, Bill Ackman went over on CNBC and said, "Or a tsunami is coming. Like, the market is going to crash." Like, you scare people like that, and then what did he do? Turn around and shorted the market.
Right.
You go out there and spread this news, and then people start to panic and sell. You short it, and he made over $2 billion while everybody was losing money because he went on CNBC and said it. So I think this one thing that happened this week is just going to make Wall Street change the rules of the game. And the way it works right now, they might just lose this game, but subsequently they're going to be winning again because they will change the rules. Nobody regulates them as much as they regulate people on Main Street. Because me and you look at Robinhood, look at Weibo and all these platforms, and they decide if you can trade or not trade. Oh, and here's the funny thing. I don't know if you watched that interview of Robinhood CEO on CNBC. His excuse was, oh, we did it because we were trying to protect
Right.
our customers. I'm like, and then a lot of people were getting on him because like, oh, he's lying. You know, I was like, no, no, dude. He like that was the truth. They did it because they wanted to protect their customers. He was honest. The only thing he didn't mention was who the customer was.
Exactly.
See,
Right. Because it
he
ain't
didn't
you
mention
and
who
me.
the customer was.
Right.
Because the customer is not me and you. It's not you out there on Main Street. The customer is those hedge funds that are out, those managers on Wall Street, and those are the people that he was trying to protect. And he said it out loud, and he was like, "No, he wasn't protecting us. Like he wasn't talking about you. Don't get it twisted."
Right. Because if I'm not mistaken, Robinhood, one of the people that owned the main bank that they shorted, like the main hedge fund they shorted, the people that own that, they have some ties to Robinhood too. Like some people was like, oh, they own Robinhood. It was like, no, they don't own them, but they have some ties to them. And
Mm-hmm.
so what happened was like when stuff like that happens, like a lot of times people, you know, especially in our shoes, you know, we end up with, of course, with the losing side of it.
Of
And
course.
I thought this was like a big turn of events to where people always speculated that Wall Street they didn't care about the little guy. Now, me and you know from investing for a long time, like we know they don't care.
They don't
So
care.
now it's like you said, the curtain's been open and people now are seeing that if you don't learn how the stock market works, you know, it's easy for you to get hurt in it because these things exist. Like we've both traded before, so we know
Yeah.
you can get in a trade and you're pretty confident because it makes sense.
Mm-hmm.
But then what happens is that trade actually ends up getting shorted,
Yep.
and then you lose money.
Mm-hmm.
But then they make money, just like you was talking about Bill. Like he made $2 billion putting out false news that drove fear to people, and you know the SEC, the government, nobody said anything.
Said a thing.
Nobody said anything. And that's the problem with mainstream media. That's part of my problem with mainstream media is that they're always slanting, you know, the information to make it work for them. Like they do this on a constant basis. That's why it's like when you watch CNBC and these different things, you have to be careful because you don't just listen to what they say, but listen to what they're not saying. Because a lot of them, even though legally they can't have skin in the game, they have skin in the game.
Oh, I mean, it's like they have skin in the game, like obviously, and they when they sit on TV and talk, and you know for sure they are saying these things because they want you, they're pushing you in a certain direction. You know, they try to like say all the fundamentals of the market and all that good stuff. It's like no, I mean, like if you think about it, what you guys, most of these guys on Wall Street, especially the short sellers, they went after GameStop.
Right.
Not thinking about the consequences of GameStop going bankrupt on Main Street. Because think about all the stores and how many people work at those stores, and these guys only care about making some money off of these trades. And I mean, imagine if GameStop went bankrupt today, how many people would lose their jobs?
Exactly.
They don't care. And then right now, when we're shorting, when we're beating them at their own game, it's like, oh, we have to change the rules because we want to protect them. These people are not sophisticated investors. They don't know what they're doing. I was like, if you knew what you were doing, you won't be in this situation right now. The reason you're in this situation right now, sweating, is because you don't know what you're doing. Go back 2008. They did the same thing. We bailed them out. I mean, each time they make a mistake, we bail them out. But when we make a mistake, they think we're stupid, we're kids, we don't know what we're doing, we're not sophisticated enough. So I'm like, you know what? The government should just stay out of this.
Yeah.
Let's keep the rules that we have right now and see what happens.
Yeah, because see, that's the thing. So in order for people to understand like how something like this works, that if they buy the stock and it's going to hurt the hedge funds, they're not stupid. Most people don't know that's how that works. Most people haven't even heard about short squeeze. So like the whole way everything was set up, just like if we go back to the recession. So what a lot of people don't know, part of the recession wasn't just caused by like just bad housing, but part of the recession back in 2008, 2009, 2007, 2006 was caused by these hedge funds and these these big corporations to where they sold back all of these bad mortgages back to the market. So people lost homes, they lost jobs behind this stuff. Meanwhile, there's a recession. You still had companies like that still making billions because they were offloading all of the debt and the loss to the public, but then they take the profits. So this is a situation where it flips. So people they don't understand like where the Occupy Wall Street thing came from, but that was the core of it.
Right.
So now this is not like Occupy Wall Street, but this is more like, yeah, we're tired of it now, so we're gonna head and take advantage of this. And
Well,
so
Occupy Wall Street was like a kid that's hungry. Like, let's say your kid, your baby's hungry, and it's like, Daddy, I'm hungry, and it's like, I don't got time for that. The baby walks around and come back like, Dad, I'm hungry. You know, he's like, okay, I'll take care of that later. And then the baby goes around and come back like, and pounding the table, like, Dad, I'm hungry. This is it right now. Occupy was like, we were saying like, can you guys fix the rules and just be peaceful so that everybody can benefit from this? They didn't listen. And now it's like, okay, we're going to take the fight to you. We're going to make it a fight. And this is the fight that we're fighting and beating them at their own game. And they can't stand it for a minute. It's like, man, I mean, I like the fact, I just love, because even this, I don't even know who disclosed this, but ideally when these guys do short companies like this, they're not obligated to disclose that information.
Right.
They're not obligated.
Right. Exactly. Like, and they do it all the time. Like I actually got a short list up here too.
Yeah.
Hold on. Cause I already got it pulled up. And at the top, you see GameStop's at the top.
Yeah.
Like, AMC is second. Right. This is crazy. Like this, like some people may not understand this belief, but 121.07%. Like that's big.
Yeah.
That's huge. And so that's why GameStop is like it is. And that's why you kind of see that this might last a little longer than people think because of how much it's shorted. But look at the companies on this list that like, these are the high short interest stocks right here. So if you just look at the list, look at all the companies that's on there that's been shorted. Beyond Meat. So a lot of people probably don't understand like, yo, I love this company. Why is it going down like this? Like, and they do this stuff. They can do it over and over and over again.
Over and over. Like they just beat the company down.
Right. Like even Luminar is on here. Why are they doing Luminar like that? Like it's fresh and new, but like Nordstrom, Tilray is down huge. So they do this stuff like that and literally like they can do it week to week. Like the best analogy I saw was like, let's say if I say, yo, V, let me borrow a pair of your shoes and you got some Jordans. I take the Jordans and I actually sell your Jordans for $100.
Yeah.
So then I wait because I already know that the Jordans are going to be worth, $20 in like a week or so. So I help it get there. So then I go like, yo, man, them Jordans, they old, they weak, they got defects, all this stuff, put out negative news and etc. And then it goes down to $20. So then I buy it back for $20.
Yeah.
So now I get to keep $80 and then I give you your shoes back. Well, I can do that 4 times a month, every day if I want. And I can make $80 every single day. And that's how that's played. Meanwhile, your Jordans are getting worn out. I'm using you to do that. And that's what happens in the stock market when they borrow stocks. So with this situation, it's like if it was those same pair of Jordans, and now all of a sudden those Jordans, instead of it going to $20, they go to $200.
Yep.
It's like, wait, hold. Now I sold it for $100. I got to spend another $100 to get them back.
To get it back.
Like, no, like that ain't part of the plan. So then what happens is they end up having to take that hit because they have to give, or I have to give you your shoes back now.
Yeah.
And they try to hold off as long as they can.
Well,
so
they did actually,
is a problem.
They did actually they got some help from Robinhood and all these brokers, because when you stop people from buying so that the price keeps going up, that's why the stock went from $500 down to $100.
Right.
so that those hedge fund guys can actually get some of it back, and that's what they did. And
Yeah.
so when I listen to these guys on TV, the CEOs, I'm like, hey, we're doing it to protect the our customers. Like, yeah, you guys did a good number on that one.
Yeah.
Because the stock goes from $500 to down to $100. I mean, obviously there's something wrong there. Because it's not like people were not ready to buy. Everybody was trying to buy. Because if they didn't do that, that stock would have been it'd have gone up to $1,000.
It would
Yes.
have hit 1,000. It sure would have, because and you can see that once it hit 500, like in AMC's volume was like 1.3 billion.
Yeah.
Like that's beyond crazy. So it would have hit 1,000. That means they would have had to pay, like they lost 70 billion. They would have lost like a good 200-300 billion, easy.
Yeah.
But of course, how it goes, all the crime behind the scenes. Then you get the CNBC analysts throwing their necks out there like, oh, these people need to be investigated. It's like nobody did anything illegal whatsoever. So, and I think this is the beginning of something, because when you see this amount of people, like for example, WallStreetBets alone, like I'm a part of that Reddit group or whatever.
Yeah.
It's super hilarious to read the comments and the memes that come in. But like, it went from like 1 million, a little less than 1 million users. It's at 6.5 million users now.
Whoa! When I signed up, when I joined the group, it was like 3 million.
Right. So it went from a couple 100,000 to 6.5 million in this last week or so. So it was always growing because it's a fun community. But so you have that many people that's a part of that, and the reason they're a part of that is because they want to make money. So like one of my friends, he had actually sent me a messenger on Facebook, and he was like, man, check out my post. So he put up a post. He's an options trader. And he put up a post, and he was like, if you're trying to learn about stocks and you're new to the stock market, this might not be the time for you to jump into the stock market right now. In particular, if you're trying to buy those companies like GameStop and AMC and Cost and BlackBerry. And do you know what every comment underneath there? It was the most hardest thing. They were like, I'd like to play a game. Like they were putting the Saw character, like, I think I'm ready to play a game. Let's play a game. Right. Because they're like, I don't care. Like they've been seeing the success from people taking, hundreds of dollars and making $10,000, $20,000, $30,000.
Yeah.
So everybody's like, well, sure, I'm about ready to take some risks now. Like I want to play. Like, and that opens up, I think that opens more people up to learning about the stock market. So I don't take it as a negative, I take it as a positive.
Yep.
And through that process, then that puts people more in line to now focus on building wealth, and they know where the money is. Because you not know of both. Like even if you're heavy in real estate, you gotta take some of that money and put it somewhere.
I mean, you gotta diversify. It's obvious.
And funds, stock market, different companies like that, even hedge funds, if you make enough money, like that's where you put your money at. So everybody knows where the bag is. And so now it's becoming one of those things where people like, I think I'm about to put some money in. I don't know. No, I don't know what happened with Dogecoin, but I had like 5 or 6 people that they've never talked to me about Bitcoin before send me a message saying, I just bought some Dogecoin. And I'm like, well, how do you know about Doge? Like, and so everybody's really, really seriously get, excited. And I had several people who made like $100 profit, $50 profit
for the first time in the stock.
And they sold, and it was like, oh yeah, this is good. I just paid my phone bill for the week. Like, and so that excitement has built something, but then it's very important for people to understand, like with things like this, if you don't know what you're doing, like we can't tell you what to do. We're not financial advisors. This ain't financial advice, all those disclaimers, but you do want to be careful around this because it's so much going on. And when you see how a company will say, we're not going to let you buy the stock anymore, like that's shady. And that's illegal. But I'm sure they won't get in trouble for that.
No, I don't think you're going to get in trouble. Because what I see here is first, regulating if you can buy or sell your stocks, I think that's illegal because if you went to a casino and you want to spend your money, they can't tell you, "Oh, don't spend your money. It's your money. You have every right to spend it
Right.
whatever way you want." So Robinhood is in some really, really hot water, and they need to figure it out and come out with a good explanation because whatever they said, I don't think that's going to cut it. But again, you can't. People forget really, really fast because remember what happened with back in the days with Facebook. Everybody's like, "Oh, I'm going to boycott Facebook," and here we are.
Yeah.
Nobody left Facebook, so I just one of those things people forget really, really fast. Um, the other thing too that I notice is the way these companies get around is they come and trick uh, people with free stuff. Facebook is free. Sign up for free. Their mission is to connect people, right? And so
Right.
you're thinking like, oh, these guys are doing something good, and they're trying to get people. And then what happens? They're taking your data, turning around and flipping it.
Right.
The same thing with Robinhood. Like, hey, come free, commission free investing platform, and then you go in there. What do they do? They take your information and flip it, and they're making money off of that. So, yeah, people have to be careful about that. But to your other point about using this opportunity, 2020 alone was a crazy year.
It was.
Just because of the pandemic, a lot of people stayed at home and got involved in the stock market. And the way things were moving in the market, I mean, we've never seen the market move like that.
Mm-mm.
You go from the bottom in March, and by July, it was back up here and some. I mean, like talking about V-shaped recovery. And so people might think like, oh, that's how the market is. It's not like that. No, it's not like that. It takes time. And if you don't understand the fundamentals, man, like after this, you think it's supposed to keep going that same route, and then that's where you get burned. So, I mean, I like the awareness that people are getting about the market. I just hope that everybody takes that logical step forward to understand, the implications and how risky everything can be. So, unless you're a long-term investor, unless you're just like, hey, I'm gonna buy this Apple or Google or whatever and just put the money there, or Tesla, and just let it sit. If you're doing that, that's cool. But if you're trying to flip and buy and sell, I mean, it comes to a tremendous amount of risk, and people need to be aware of that.
Yeah, it does. This stock market has definitely been the craziest ever. You could almost win with any type of investment.
Yeah.
Like look at SPACs. So SPAC stocks have been around for forever,
Yeah.
for a long time. Most people haven't heard about SPACs. Well, this 2020 was like the year of SPACs.
Oh man.
Like even if they weren't good, almost everybody made money from it at
Mhm.
one point. Like even companies that were faulty, like Nikola, like they went from 10 to $50. People made money, and I don't know how it's still like hovering around like what $15-$20. I don't
Oh,
even.
it's like 20. Last time I checked, it was like 28.
Right. So somebody obviously believes in the company, even
Yeah.
though they don't have anything. Which it's a SPAC, so it doesn't have any product, but most of them don't. But like it's been the craziest year. So it's almost like this happening in January almost sets the tone for the rest of the year. Like I was saying, like just on WallStreetBets alone, is 6.5 million people.
Yeah.
Like, do you know the type of way you can move a market like that or move a stock like
Oh,
that?
I mean, like that would be, and
It's
I think that's what Wall Street is worried about right now because more and more people are going to get involved. That number, so you're just talking about that one group on Reddit. So there's other groups on Discord everywhere. There's
it's
more
huge.
people paying attention and listening, and the news spreads like wildfire. The minute somebody says "bam," it just goes on Twitter. Everybody goes. So if they see you on Wall Street shorting, they can just turn around and be like, "Okay, we picked our next target. Let's go after this one," and everybody goes after
Everybody
that,
goes after it.
push it up.
Yeah,
So
look at the quick money we made in some trades. Like I've never considered investing in AMC stock or trading it.
yeah,
It's AMC, like who's the movies are having a hard time. Got it at 4, in less than 12 hours sold it at $20.
Yeah.
Like, and it was only because of just the rumblings around it. Like, everybody is on it, and AMC is still up. So I don't know if you read it, but like AMC, they issued more shares. So most people may not understand what that means, but it means they maybe put more shares in the market, right? Because they saw how much their market cap went up.
Yeah.
Like, GameStop market cap put them in the top 500 companies. So like AMC, they actually sold back shares or gave more shares. So what that does, that actually brings the price down some.
Yeah.
So it wasn't just all like people selling, but it just brought the price down some because they were able to take enough money to hold them and keep their doors open through the entire year.
Yep.
That's how crazy of a buzz that just the stock market community just they literally saved an entire company to where they can take a whole year and try to figure out what can they do around this pandemic. So now with that, this has never been happened before. They can just say any stock. And like, look at the stocks they talked about Sundial, Dogecoin. Like I told you, I don't even know where people that I know heard about Sundial, Naked Brands. I was thinking Naked Brands was like the juice, and it's not. It's like an underwear company.
Yeah, it is. Yeah, it's an underwear company,
like
a clothing company.
Right. Like, where'd that come from? Like, all these different companies, and they won't even short it. They just was people picked it, and people was like, okay, let's go for it.
Yeah.
And because you had so many people in this group, like the gentleman that made $47 million, that's a lot of buying power that a group of people have now. So you're talking about being able to like move a market. So literally everybody's been asking me like, Joe, what's the next one? I was like, I don't know.
You don't know.
I mean,
well, what's the next one? Just keep watching Reddit.
Yeah, just watch Reddit. They're gonna let you know what the next one is, and they're gonna put it's gonna be like target.
Yeah, I'm actually jumping on Reddit right now because like you keep an eye on there on that WallStreetBets, you can totally have an idea of what's coming.
Right. So that might be another way where we may see wealth transfer, because we just seen it transfer from hedge funds to regular people. People are like in tears about the money that they made. They've been trying to figure out the stock market, been trying to like, so it's absolutely revolution. I mean, we're like some of the older heads with investing, like, because of our time in the market. But
yeah,
just like you, listen, I love it. I'm sure you love it. Like, it's the most beautiful thing like I've seen this year. Like, wait a minute, what? Like, we all get to win like this? Because it can be difficult. So teaching people how to trade is something that a lot of times, like, you want to teach people, but you already know, like, you know, it's not as simple as it seems.
Yeah.
So, but when you see something like this, it kind of opens up the door and makes it a little bit easier for people to listen.
Yeah. Well, and I think like for the most part, we've gone through a phase where trading used to be a thing of the elite, right? Yeah. It's like, hey, Wall Street and all these people, if you want to place a trade, you have to pick up the phone and call somebody and talk to somebody that knows somebody and that whole thing. And now, I mean, like, you pick this little guy right here. I mean, like, you could be trading sitting on the bus, you know? It's like everybody's trading now. And so Wall Street is losing control and they don't like it.
They don't like it at all.
Yeah, it's like, we're not special anymore. It's like, we used to be special. We used to call the shots, not anymore. And they're not happy about it. So yeah, I'm looking at that graph you just pull up there. That's GameStop. Look at that.
And when it's that high, so people might not understand why it's high like this. It's high like that because a lot of people are holding onto the stock.
Yeah.
People aren't selling like people may think it was. So like
that's that drop right there in the middle. Man.
Right. This is the beginning of January. It was at $38. I mean, look at this. This is crazy.
Wow.
This is crazy. The end of the year, it was at $19. That's crazy.
No, I mean,
that price means that people they're not selling it. They're holding it. So this is high. Even though with everything that happened yesterday and it got driven down,
Yeah.
it is right back up. People like, no, we're not letting go. So they're holding long options as well as the actual stop.
Yeah.
This is where it got way up here the other day, the other morning.
That 500 point.
Right.
Yeah, and then look at that pullback. That's where they stop people from buying. That's
Yeah.
why it pulled back down to like 112.
Yeah. Crazy. I don't think I'm not zoomed in enough to catch the actual bottom, but yeah.
The bottom is like 112 because I had orders ready to go. And I'm like, buy. It's like, we don't support over the counter or ping slip stocks. It's like, what?
Right.
I just bought this thing like 10 minutes ago.
Right. What are you talking about? Like, look at the 52-week range, $2.57
to 500. Oh man.
Yo, it's crazy. It's so crazy, man. Like, it's definitely interesting, but this is the craziest chart ever, man. Like, yeah.
Yeah, that's again, it's a serious learning opportunity. And I personally I'm happy that people are really aware of this. I'm mad that they're not going to do anything to punish the people on Wall Street that have been like twisting the rules for years and years and years and getting away with it. Because if anything were to happen right now, I want any investigation to go after Robinhood, Webull, and check on these guys on Wall Street that I think they can just short stocks just at random. It's like, no. Like, we have to, because if you don't control those guys, and then I don't expect them to come out and try to regulate people here, because they went after that Reddit group. Like, they're trying to shut the group down. Discord actually tried to, like, the Discord group that was out there chatting and talking about it and live streaming. They're like trying to shut it down.
Right. Yeah, people are pissed. Like, I don't know if you can see the comment, but it's a dude saying, I don't know if it's a female or male, but they're saying like they've been shadow banned for talking about it on like Instagram. So that's interesting because like I can actually believe something like that. So like what's his name? Brian Young. He was on live stream.
Yeah.
And literally like what happened was something happened with his internet and it just went out.
Really?
Live stream and everything. So because people, you know how it goes. So it's like you have people speaking out against stuff. Of course, they're going to try to regulate it as much as they possibly can. You know what I'm saying? They're trying to regulate it because they don't like that information getting out there. It's very possible that, you know, you got the SEC and people like that, you know how they do, you know exactly how they do. They'll look through and they'll watch stuff. So like they were talking about the SEC how they might investigate, you know, WallStreetBets. You already know they were looking into it while they were saying they might. So like that's how all of a sudden, like WallStreetBets, they lose their Discord because it's violating, guidelines. How is it violating guidelines?
Yeah,
it's a thread, and I'm sure there's other threads out there that are worse.
Oh, way worse than that. You know for sure, it's not a question of really. They just want to shut them down. They want to restrict that information from getting out there, and I bet you they can even take it to the next level. Because think about it, and this is the thing that people don't even know, that this thing is not just Wall Street. It's big tech all together. If you go check out Robinhood app on your phone, like you want to download the app, go under the reviews and just read, right? Yesterday, they had crazy comments. People were giving them like 1 star and everything. And guess what Google did?
They blocked it.
Google went in there and cleaned it up.
Wow. Are you serious?
I'm serious.
Yeah. See, that's the stuff I'm talking about, man. Like, that's the stuff I'm talking about. Like, you can't be doing stuff like that. Like, You can't do stuff like that. That's based off of, like, I probably can't even find their reviews on. Oh, I can see. Oh no,
Yeah.
that ain't it. They probably done took the review thing off.
Yeah, see if you can pull it up. Cause like I'm like, why would Google be involved on this? Like they got nothing in this. Like nothing.
I can't even get it to. I can't even get to it, man. That's crazy. That's crazy they would do something like that. But
Yeah,
that's
Google is running in and scrub the reviews and like, no, we're gonna keep it nice and clean for you guys. Like,
mhm.
I mean, they're all Silicon Valley guys, and it's like, no, protecting each other.
So here's the thing. This is why, like, I know most people who are very genuine on YouTube talking about the market and stuff, like me, you, and several other people we know and stuff like that. Like, this is why we do this. This is why we talk about it, because the markets, if you want to make money, you have to learn how things work with the market.
Yeah.
It's not difficult to learn how things work. Because what happens is a lot of people, they may feel like the stock market is slow pace and things like that, but really all it is you just may not understand how it works, because there's so many different aspects to put your money in a place to where it makes money. But because of the way things happen like this, a lot of people get caught up with the media and they get caught up with the news.
Yeah.
And when they get caught up with the media and get caught up with the news, they get led down the wrong lane. Like, you had people feeling like they were scared to invest in the market, in particular, like AMC or GameStop, because they're like, oh, they saying that there's something wrong. So people are like, I'm gonna move away from it. Like, and so they do stuff like that. And the CNBCs and media channels, they constantly pump negative news. They constantly pump negative news to put fear out there.
Yeah.
Because that helps them to benefit. That helps Wall Street to benefit from that. It's like back in 2008, 2007, the recession. Like, I bought Bank of America at $2 a share.
Yeah.
We were talking about how Bank of America is going bankrupt. Don't get in. Don't get in. Meanwhile, our government's making Bank of America buy different companies.
Yep.
Why would our government make them do that if they're not going to help them? Bank of America didn't need the help, but they gave the money as a quote unquote bailout, even though they didn't necessarily need it to take on these companies.
Yeah.
But on CNBC, they're like, don't buy it. Don't buy it. Hey, it's going bankrupt. So people like me, I $2 a share, I bought like 300 shares, because I was like, well, one, we had our mortgage through Bank of America. So I already knew the scope of Bank of America.
Yeah.
And so I bought in. And then 6 months later, what they did was they said, well, Bank of America is a good buy right now. So what that means is, while they were telling you not to buy,
they were buying
behind the scenes.
Yeah.
Right. And they were picking a lot of it up. So then they tell you it's a good time to buy. So then you start buying it. So now they've already made money. It goes up even more.
Yeah.
And then all of a sudden you see it chop down quick because of some of
the they took profit.
Yeah.
Yeah. And this is even back in last year in March, when everything went down, and I was like screaming at people, like Bowen went down to like $99.
Mm-hmm.
I'm like, from a high of about $400 to a low of 99. I was like, buy Bowen. It's like, no, it's going to go bankrupt. I was like, what are you talking about? Bowen can never go bankrupt. Like, it's never going to happen. I mean, America is never going to let Bowen go bankrupt. I mean, like, tell me, what? They're going to be buying planes from Airbus in Europe? That's never going to happen. Buy the stock. And people are still scared. Like, it's going to go bankrupt. It's like, no, if you know how these things work, Bowen is not going bankrupt anytime soon. That's never going to happen. And I just like, so yeah. Again, CNBC is I call them, it's like a propaganda network. Because what they do is, if they want to pump a stock to go up, they'll go on CNBC and scream buy, 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 buy. If they want it to go down, they'll go there and be like, whoa, stay away from this stock, stay away from this stock. And people react to it. I mean, because if you think about it, something like Jim Cramer, they always tell you to buy the big companies, buy the big names and put them in your portfolio. Buy this. And like, they try to give you a recommendation. I actually did a video. I think the Motley Foods actually put out like 10 stocks. They say that's the top for 2021, excuse me. And I'm going through them. I was like, mm-hmm. And the cheapest stock on there was like $70 a share. I'm like, how many people you think got that kind of money to go out there? And then the most expensive was, I don't know, $400 a share. I was like, who do you think got that kind of money? Why can't you like recommend stocks that average people can actually buy and hold it and watch it grow? And but they recommend those stocks because they get a kickback. And then one of the things is like even when you read articles about a stock, I'm just like, people get paid to write those articles.
Yep.
So I think somebody's asking a question there.
Yeah. So do I need to buy some of these or stay far, far away? So yeah, Tierra's a little new to stock game. So
that's a good question. So first question to you is, are you buying to quick flip it, or are you buying to like hold it in your portfolio? Because like it's like there's two things going on here. There's like long term and short term. Short term would be like, I just want to touch it right now and flip it in the next 30 minutes or an hour and just make some money and get out. If you want to hold it long term, this is not a stock to like stay far away from it from a long term perspective. Because it's like you're buying here to sell down here, which is the opposite of the market. You're supposed to buy down here and sell up here. So that would be my answer for you. The best ones for me have been NEO and Nvidia. You cannot go wrong with NEO. I am actually on Monday. I'm actually loading up again on NEO. I bought NEO. I bought NEO at $6, at $9, at $21,
at $10,
at 10. I bought it at 30. And I'm gonna buy. It's right now maybe around 57 or 58, and it's consolidating around that 58, 60 price point right now.
Mm-hmm.
The next step from there, NEO is headed over to 80.
Yeah.
So I'm actually loading up on NEO because I think their earnings report comes out in February. Is it February or March?
I think it's March.
Okay, so
I think it was March.
Yeah, so I'm gonna load up on NEO. NEO is definitely one to buy and hold, and I would say NEO is a poor man's Tesla.
Tesla, right, exactly.
No, not in terms of technology, but in terms of the price of the stock.
The price point, right? So that's the thing. So, like, I think what happens is, I think what happens, and so I did a video about like the best 10 or 10 stocks that you could buy under $20. So I had someone comment on the video and they were like, well, I see you got Zynga on here, but Zynga never did anything. And I was like, well, where are you looking at it from? It was like from my experience. I'm like, oh, so were you looking at it from like you were holding it for like a week or for like a month? Because if you go back 3 years ago, it was $2.
Yeah.
So 2 to 10, that's 5 times the money if you had bought it back then. So I think sometimes, especially on YouTube, like I don't think people understand why people do these. A lot of the videos are about trading mostly now.
Yeah.
But a lot of people don't understand. It doesn't mean that you buy up everything. It doesn't mean that you get weary because you're like, oh, I missed out, or I'm trying to find.
Yeah, that's FOMO.
Right. So a lot of people have that FOMO with this. They're like, oh, so really, it's not like you're missing out if you miss out on this particular. But if you really don't know what you're doing, then it's probably best to not bother with it.
Yeah.
Like if from hindsight or just from experience, you have to be very careful, or you take the approach to where like there's a rule of thumb for investing risky. The rule of thumb for investing risky is put in money that you're not afraid to lose. Yeah. So whatever money you put in, if anybody wants to play this, then whatever money you put in, be okay with losing half of it, losing 75% of it. Be okay with losing 100% of it. But it was something like that risky. If you're not okay with that, then leave it alone. Because
what I think is like a lot of people are coming in thinking like they're looking for that instant gratification. I'm gonna put in $1,000 and tomorrow it's gonna be $2,000. And so when they don't get that, they get disappointed. So people you have to change your mindset and know that, hey, this is a long term. The best way I try to explain to people is like, think about the stock market as your savings account, in my opinion. if your savings account is paying you, I don't know, 0.03% with Bank of America or Wells Fargo, if you take that money and put it in the stock market, even if you don't want to put it in individual stocks, which is a little bit risky, you put it in our ETF or a good growth index fund and just let it sit there. Even if you're getting 3, 4, 5%, that's better than what you had in your savings account. So that's the mindset. And so for people that I think that they just want to come in there and just double their money overnight, those are the people that would end up getting hurt in the market and would complain about it every single day. So it's a tough business, you know.
Yeah, like I'm all for us. I'm all for making money. I'm all for I was excited to see this stuff. Like, I mean, I didn't play GameStop, but I definitely played AMC, and I played Naked, and I played what's the other one? I can't remember the other one. But
Course, is it Cost?
I didn't play Cost.
Okay.
I didn't play Cost. Like, I should have, but I didn't. But like, I'm all for it. Like, I think it's cool. I like seeing this stuff. I like reading the stories of people who've been able to pay off their mortgages, been able to pay off, student loan debt, been able to get treatments for diseases. Like, people who at one point lost their homes and everything back in the recession, like being able to celebrate their wins. Because it's the craziest thing, but like, I'm all for it. However, everybody don't need to be a part of it because, there's just some risk. And most people, one of the things that happened to a lot of people, I was explaining this to like one of my younger cousins, because he had put money in, but he didn't sell it, or he didn't take any profits. So it was like, I was explaining to him, like, you have to know when to hold. I said, so you can still hold some and still take some profits.
Yeah.
So you still support the cause of holding, but still take some money.
Yeah.
But most people wouldn't know how to hold. They wouldn't understand that either.
Yeah.
So Cost, like, let me look at Cost. So it said they have the BlackBerry.
Let's look at both of them. Like, anything happened with BlackBerry? BlackBerry, there was a little bit of movement, but not so much. Not the explosion that we saw with AMC and and GameStop. Yeah, but there was a little bit of movement there.
Yeah, so you can see BlackBerry is if you go back like to the beginning of the month, you can see how high it's moved. So like in the last 5 days, so it's red because it's down today. They just changed the color, whatever's last. But like, you seen it run up. Like, it ran up pretty big.
Yeah.
But I don't think that was on the list of shorts. Like, I don't remember seeing it. I remember Bed Bath & Beyond being on there, but nobody talked about that one.
Yeah, I saw that one too.
I know BlackBerry was on the list, but I don't remember them being shorted. I guess it's just one of the ones that people, talked about. Like, but yeah. So like BlackBerry, it had its run up, but it's been pretty deflated for like the last, few days or so. But they did put that on the list because the volume was high too.
Yeah.
So a lot of people had trouble with getting BlackBerry as well. Like, Cost was one. This was the one, like, I was telling people about, like, but they didn't know what it was and they weren't paying no attention to Cost. So they was like, what is that? I was like, I don't know. But so Cost was crazy because that was at around $10.
Yeah.
Look, it was at 3.
It just started running up.
It was at 3 like 8 days ago.
Yep.
And it went to 10. And then, the other day it went to 90.
Up to 120. I don't know, like, I think it was like 130 or 140. It was insane.
Can't even see it on the screen. Like, oh, here we go. There you go. Yep, went to 112.
No. It went to I think like 130 or 140.
Right.
Yeah.
127.
Yeah, there you go.
From 80 cents. So like, that's but this was one of the plays one of I paying attention to. So it's like, if you know what you're doing and if you're okay with trading and you're okay with understanding that trading comes with risk, and understand if you've ever traded, there's going to come a time when you're going to lose money.
Yeah. I mean, that's just the bottom line.
That's the bottom line. And if you can't stomach that, then trading definitely ain't for you.
Just be an investor.
Yeah,
just pick good companies like Tierra is doing right now. Nvidia and Neo, those are great companies. I mean, like I said, I'm loading up on Neo because I have some Tesla, and when I get a pullback on Tesla, I'm gonna keep adding. And those, I mean,
Tesla pulled back today.
Yeah, that's not when I hope for even a bigger pullback than what we got today.
Yeah, I mean, it wasn't, Tesla don't stay down for long, so because people are always buying it. Like,
yeah.
I mean, so it's not too crazy, but
this is I personally I thought Tesla was going to pull back more than that because usually when they get the earnings report, it's not always good. Even when the numbers are good, the reaction to the stock is always like sell.
Right. Because short sellers be trying to get it, but they can't.
They can't
get it. They lose money every time
time. I don't know why they can't give up.
Because they don't like Elon. That's why. Because Elon stand with us. He's standing with little guys. They can't stand that.
No, it was good to watch some of these guys talking about it, like the big tech guys. And like just saying, like, yeah, Wall Street has been doing this for years and nobody said a thing. Now that Main Street is trying to do it, we're trying to regulate.
Yeah, it's crazy. Like, look at the hold on, let me go to this Weeble joint real quick. Like, look at the I was on this earlier. Yo, look at the buy on GameStop.
Wow.
Dude, it's just nothing but green.
Wow.
Look at how crazy that is. Of course, that's just kind of summarizing the last month.
Wow. It's crazy.
That's crazy. That's how much people been buying. So they're not, and the thing is they're not selling. So that's the crazy thing about it.
Yeah, I mean, at some point people are gonna have to start selling because it's not sustainable.
No, it's not. It's not. But they trying to hold long enough to where it costs, because it's still, the shorts are still pretty high on it.
Yeah.
But somebody's so intelligent that they know that. Like, they're like, no, let's hold right now because the shorts are still high. We want to make sure that everybody's gotten rid of their shorts first.
Mm-hmm.
And so they're just holding it. And so, of course, the people that made the most money through this, they can spare some change.
Of course.
I don't know how many billions was made through this, but it was a lot. So, like, they can spare money and just let it sit. Like, the dude that made 47 million, like, like he can leave 5-10 million if he want. It don't even matter. Like, his life is forever different.
Yeah. Well, the other thing too, the question I was like, for somebody to make 47 million, you're gonna have to have a lot of liquidity to put in the market to make 47 million.
Right. So he had $50,000 in options.
Okay.
But he bought those options a while ago. So it wasn't recent. He had a long option play. So what happened was he would post in WallStreetBets about how much he's down. So he had been down like $30,000-$40,000. Wow. Because it kept getting short. Because at one point GameStop went down to $2.
Yep.
It kept getting short. So he was left with an L, holding an L, but he never sold it. So I can't remember what happened, but so many people started putting some steam around that. So he was one of the ones, because of course, if he bought it prior to this and bought it last year, then of course, the price for the option was super cheap.
Yep.
So 50,000 in a cheaper option. That's a lot of shares.
Well, that's a lot. 50,000 at $2 a share. So contracts would probably be like 50 cents.
I don't know. Like, it's crazy.
Yeah. With at $2, contracts are probably like 50 cents a contract. And each contract has 100 shares in it.
Right. So that's why. So when it went up, when it first went up, he had screenshotted and shared his information, and it had went to, and you could see on there that the profits that he had totaled $22 million. So then that was when it was around like $150, $200 a share. So when it went to 3 something, he came back and let everybody know, like, hey, I'm at $47 million. It's like,
wow.
listen, I would totally disappear. I mean, like, like, yeah, like it's totally crazy. Like, so, but what that did was Becca said, yeah, I'm gonna stick long term.
There you go. That's what's up, Becca. That's what's up.
She said,
What do you have in your
risky
portfolio?
for me.
What's your best performing stock, Becca?
Right. So, and you can't go wrong with long term, and there's nothing wrong with this either. It's just more so like so. So let's explain what risk is. Risk is you have more risk when you don't know what you're doing.
Yep.
When you know what you're doing, it's less risky. So like we can communicate and say, hey, I mean, there's some risk. If you're not afraid to put your money in and lose it, it's cool. There's some risk. YOLO, right? You only live once, right? That's been the theme of this, YOLO, right? So, but if you don't know what you're doing, the risk is super high. So a lot of people think that trading is super risky when it's really that the risk is more entailed to your knowledge of how to do things, because you can protect yourself in trades by putting trailing stops and limits and all these different things, so that if it goes to a certain level, it'll just sell. So you don't lose as much money. But if you don't know that, then you wouldn't know, and then you end up losing all the money you put into the option, versus like understanding how to set those things up to protect yourself. So, but yeah, like it's nothing wrong with long term. You're not a punk for doing long term, and it's not a punk conversation, and there's nothing wrong with trading either. So
The thing is, like, I mean, for the most part, at least 50 or 60% of the people, not even like 70% of the people in the market are long-term investors.
Yeah.
If you think about it, your 401k, all that good stuff, those are most of them are in long-term portfolios. You're buying some index funds and some ETFs and just let it in ride. And so some even have like the maturity date, like 2040, 2045, or 2050. And so those are long-term investors. And even people that trade, you still take some of that money, you put it in a long-term
investment. Right. That's how you do it. Yeah. That's how you do it. Because you make the profits and then you take care of that money. You don't make the profits to lose it all or to go
exactly. So you make the profit here because trading is very risky, and then when you make the profit, you go put it in a long-term investment as protection.
Yeah, especially if it's a dividend play.
Yeah.
So all of it's good, as long as you understand what you're doing. Like, because I'm 100% with all this stuff that's happening with WallStreetBets. Like, hey, like, yeah, make them pay, because they've like most people don't understand how much people have been hurt through shorts and businesses and lives. So like, so it's all has its aspects, and all you have to do is learn more about it, and it's fine. Just like investing long term, and then having a dividend portfolio, and then you can trade. You can trade options. The most riskiest thing that I don't care if you know what you're doing or not. It's just completely risky is margin, because that's when you can literally go into debt. So if you don't know anything about that, you can literally go into debt with margin. And that's a story that's happened with a lot of people. Like, unfortunately, one of the gentlemen, the young man that killed himself from his Robinhood account, he had all that money like tied up in margin, and Robinhood's, and that's the thing, Robinhood's platform didn't even refresh enough. So he may have just seen it at a certain glimpse, but it wasn't the total. So, but yeah, using margin is, that's the craziest side of stock market. But for the most part, like, if you know what you're doing, it's cool. So if you choose to be a long-term investor, that's fine. There's nothing wrong with it. If you choose to trade, there's nothing wrong with it.
Well, to me, for the most part, at least be in the market. Don't sit on the sideline. Be in the market. And most people start out with being long-term investors. I didn't start out trading. I would just buy and just hold. That's where I started. And then I started learning and seeing that there's opportunities in trading. And trading, not just like doing like, on a daily basis, but like trading opportunities. You'll see a company that's coming up, I can buy this company, hold it for a month or two, and make some good money and take that money and go find the next one. And
Right.
if you have the time, and the reason why a lot of people don't do trading is because it takes a lot of time for you to research and make sure you stay up to date. But with investing, you just put that money in there, it goes to sleep, you go buy your business, and you ain't got to worry about anything.
Yep. Yep. Literally, like I have, so my portfolios I have an M1 Finance portfolio, Charles Schwab. Those are like my long-term investments.
Yeah.
So then my shorter-term investments are through Webull and through SoFi.
Yeah.
And so like in my M1 Finance, all of that is just purely like dividend play. Well, I'll say 80% of it is dividend stocks.
Yeah.
Then there's like another 20% that is in like things like, whereas like say like the cannabis stocks, like it's too many of them out there to like pick just one. So I just got a bunch of cannabis ETFs in a pie.
Okay.
So you can have things separated like that, and there's nothing wrong with trying to figure out how to trade. There's nothing wrong with it. It's just that a lot of times people get attached to quick money. Granted, like everything we're saying is like we're not going against anything that happened. In fact, we're for it. We made some money through it too. We made a little change through it too, just because we were like excited because we know what this means, and we know the potential power that this brings. So like I'm all like if we could do this if something could be like this every month, I'm with it because it's almost like the Hunger Games or something, or like one of those movies where you see the people who are controlling the game, they're living a life of luxury, all nice, pretty, and prim, and then everybody else is like working in the factories, eating scraps and everything, and they're all nice and healthy. Then someone breaks the game and busts through, and they disrupt their entire lifestyle. And now, whereas everybody was getting scraps, now everybody is getting full course meals. And even though they not in a bad situation, they still upset about that.
Yeah.
So I love it. Like, man, listen, I love it. I'm not being distracted totally to the point I'm not paying attention to anything else, but I definitely keep watching, check in on things, because even in the midst of this, you still have some other good things happening in the stock market as well.
I'm always checking because to me, like even this past week, it was good because like certain stocks that I was looking at pulled back a little bit. So I'm just like, okay,
yeah,
you gotta pick up some of those stocks. One of the things that I think we or the government or whoever's in charge can do is mandate that stuff like this get taught in high school, first year of college, that people can learn this stuff.
Yeah.
This is more important to me than some, I don't know, some history class.
History lesson.
Yeah. I mean, like this is stuff that really impact your life moving forward. You can learn all you want about history. I mean, I don't know, they can give you a textbook, you can read that at home, but stuff like this is stuff that's going to put a roof over your head, food on the table. I mean, like it's going to keep you moving. It's going to help you pay for them student loans and stuff like that. But history, like, man, it's cool, but I mean, we're pushing so much emphasis on stuff that doesn't help anybody. So investing classes in high school and first year of college, make it a must.
Yep, absolutely. This has been by far the most historical week in investing in the stock market. I know, just like you, just like me, like of course when you're in this arena and this is like something you pay attention to daily, like it's just like you're like engulfed by this because you're like, man, this is stuff that we always talk about doing.
Yeah.
Stuff we always talk about dreaming happening, because it just opens up the market to everybody a little bit more. And then it also makes the hedge funds move a little bit lighter now. So they're a little bit nervous because even though they might have the Wall Street on their side and stuff like that, you don't have the same power as 10, 15, 20 million people.
No, you don't.
You can't like even what's his name? I can't think of his name, but he was like telling the short sellers like beware because the Reddit folk,
they're coming.
Like they will crush you and there's nothing you can do about it.
Yeah. No, I mean, from a historical standpoint, when if your grandma is talking about GameStop, you know something crazy is going on.
Right. Like, grandma, what you doing talking about GameStop?
Yeah.
What you know about GameStop? Yeah, so it's been crazy. And what Robinhood did, I never thought I'd see people blatantly do that. And that's not the first time. Because I know, like, well, I know you can talk about it a little bit. I know, like, they cost you money before. Now
Yeah.
I don't fool with Robinhood really either, because I know they cost me a little money, but not crazy.
No.
I know they cost you a ton of money.
I
And
got burned in Robinhood. Like everybody's like right now, like trying to leave Robinhood. Like I was out of that place back. When was that? Like in February. I was like, man, I'm out of here. I can't
yeah,
take this.
yeah, they and in that particular instance, they burned a lot of people too. And a lot of people lost a lot of money, a lot of profits, and
A
didn't get
lot,
it. And nothing happened.
Well, you see, to me, like Robinhood is a tech company, and if you look at companies like Twitter, Facebook, um, YouTube, they have the monopoly of telling you what to do, what to say, when to say it,
Mm-hmm.
how to say it. And so Robinhood decides to tell people, hey, we're going to stop you. You're trying to buy. We don't want you to buy.
Mm-hmm.
It's just like Twitter would say, we don't want you to post on a certain, whatever on this platform, or Facebook will censor you. Once you allow one company to do whatever they want to do and we don't push back, this is what we get.
This is what we get. Yep. Because that was the most shadiest thing. Like, you couldn't even search GameStop, AMC, Bed Bath Beyond, BlackBerry.
It was so obvious
You
that
couldn't
these
search
guys
them
are
on some
colluding.
company.
They're
Like,
colluding with Wall Street, and nobody. I haven't seen anybody in the media, or even with the Biden administration, come out and say this is so wrong. I mean, how can you be playing a game that you set the rules for the game, and then when I start beating you on your own game with your rules, and you trying to change them?
yeah. AOC, she was the only one that said something. She did like a live stream, and she
I can't even take AOC serious because what did she do? Go look at the people donating money to her campaign. She's just doing this stuff. It's just for show. She can't.
Right.
I mean, like she can't do anything.
Right. So it's like she's the only one that came forth and said something. And it's like, okay, well, clearly, like, because if you read the laws about market manipulation, what Robinhood did, or if it wasn't them with the clearinghouse, well, Robinhood admittedly said they did it. So, but between them and the clearinghouse, they clearly broke the rules totally.
Yeah.
Like, they broke the rules totally according to what the rules say you cannot do with market manipulation. They broke the rules, because you can buy a stock, and now your stocks went up. Okay, well, let's buy some more because this is fun. Now, it's normal for stocks to halt if the volume is crazy.
Yeah.
It's going up and down. It's breakers. It will halt.
Yeah. Circuit breakers. Yeah.
But the fact that you said, hey, y'all can't buy no more, but if you want to sell some, though,
You can sell it.
right. So like we was talking about before, the customers you were looking out for were the ones that needed the price to go down, because they're like, I don't want to spend $2 billion. I don't want to lose $5 billion. Like, can you help us out? I'm sure people were like, and the thing is, they can afford to lose the money.
Yeah.
Because they can get as much money as they want.
When a stock goes from $500 down to $100, that's a spread of $400.
Yeah.
And so, can you imagine from a Wall Street perspective how much money they saved doing that?
Exactly.
Billions of dollars saved. So yeah, I mean, retail investors, that's us. We're going after these guys, and the only way we can beat them is as a collective. And if we keep doing what we're doing, man, I bet you they are going to, at least at some point, maybe start putting some rules and regulations on shorting. I mean, ideally, shorting is not really, in my personal opinion, is not really a good thing in the market.
No.
And I'm pretty sure these guys, the people that instituted shorting, they did it because It's just another way for you to make money.
Right.
Now it's just another way for you to make money.
Right.
So what we got there? What should invest in? I have $700 in Dogecoin.
I lost out.
I lost out. Okay.
So yeah, that's an example of like they probably got in when it was a little higher, and it's been trending lower like for the last 12 hours or so.
Yeah.
Mm.
Well, I'd stop hitting 209. Again, if you're looking to invest, it would be, are you looking for a long-term investment, stuff that you can put money in there and come back 2, 3 years from today and see some growth? Or are you looking for, I want to put my $700 there and come back in 2 weeks and it's $1,400 double? Is that, what are you looking for? So because the answer would be different. If you're looking for long-term investments, there's a lot of companies out there that you can invest in that has growth potential. I'll personally say that the electric vehicle space right now is really just heating up, and that's the future. That's been made clear. So if you're young and you're still looking to put that money in there, electric vehicles, because 10, 15, 20 years from now, those will be some really good companies. So find one of them. You can go, there's a whole list of them out there. You can try to invest in it and just put that money there and let's let it ride. My kids are 2 and 4, and that's what I did. Just electric vehicles and any stock that has to do with that space. Put the money in there, just like I said, and 15, 20 years, we'll see.
Right. They said double. They trying to make money. So
okay. I didn't even read that.
So like when you say invest, so there's a difference. There's a difference between investing. There's a difference between trading.
Yep.
Trading is where you make fast money or you attempt to make fast money. Trading or investing is more of a longer game, right? You're investing for long term. Now you can double with both of them. It's just one takes a little longer than the other. So, and then also it depends on what type of company you invest in as well. So like if you're trying to invest long term, for example, then you would invest in companies that that are stable. For example, like investing in companies that have just been around for a long time, that's stable, or even if it's an index fund. When you're trying to trade, then you're looking for something that that you have a guarantee. Depending on if you're trading or if you're like trying to trade options, whatever the case is. So when it comes to that, there comes some metrics with like what's the best trade to get into. You know what I'm saying? Like now we can't on this live stream on YouTube, we can't technically say you should do this, but like there are options out there. Like, is it still too late to invest in the GameStop game? Well, that's a yes or no answer. Like it's late if you care about losing money.
It's complicated. Put it that way.
Complicated relationship right now.
It's complicated.
Because like what happened the other day with Robinhood, that kind of messed up the surety of what could have happened. Because if it wasn't for that happening with Robinhood, we can tell you GameStop would have hit $1,000. Easy. But when that happened, now it's kind of like so they can hurt people. So it's kind of like a catch-22. So like you ain't afraid of losing the money, you can do whatever you want to do. But if you don't want to lose money, then you kind of have to give yourself a second thought about it. Like, because really what a lot of people are doing is they're buying it to hold it. So what's going to happen is they're going to try to hold it for a long time so that way the hedge funds don't be able to reap the benefits from it going down. But once that time period passes and those shorts have expired, like I don't know how long they are, then what happens is what you're going to see now people are going to end up having to get rid of that stock. So it's kind of a complicated situation right now. Now, if you asked us like a week ago, we were like, oh yeah, put some money in that real quick and find some time to get out of it. Like we could have told you that. But after between today and yesterday, like it just kind of puts a little kink in what's going on.
Even if you want to take the chance, here's what I would do. If you really feel strong because you can't fight FOMO. It's like, I really want to do this. Make sure that you understand the tools that those platforms have to protect you. So I'm talking about a trailing stop loss or just a flat out stop loss. So if you put in your $700 and you say, hey, if this money goes down to say 650, I'm only ready to lose $50 and get me out. The downside of that is it can get down to 650 and get you out, and then turn around and go all the way up to $1,000. So you have to be. I mean, that's how you manage risk. So you make sure you understand those tools. I don't know what platform you use for trading, but most platforms do have those stop losses and trailing stops that you can use to protect yourself. So somebody is asking about, so Foreign Barber asking about AMC, Naked.
It's kind of the same thing, but Naked and AMC are cheaper. So yeah, it's a lower risk because they're cheaper depending on how you're investing in it.
Yeah, I personally still have some Naked. I bought like 5,000 shares 2 days ago. Took profit, and then took out my initial investment and some profit. So what I have in Naked right now is I have about 2,000 shares, which is absolutely house money. The gains that I made out of that stock, I'm just letting it, like, if it goes up to $3, $4, $5, $6 this coming week, and I'll smile. But if you start pulling back, I just cut my losses and get out. But right now I'm playing with house money. So
to explain so anyone that doesn't know what that means. So like, if you invest in a company, let's say a company is $10 a share, and you decide to not invest, but you decide to trade it. So you buy 10 shares, and that means now you've put $100 into this company. Well, now the stock price goes up to $100. So now your $100 has now turned into $1,000. So now your initial trade that you put in was $100. So what you look to do to take profits is you'll now sell like maybe 5 shares.
Mm-hmm.
You now lock in $500, or 6 shares and $600. So now you locked in $500. That $500 is still $400 more you put in. So you've made money. So now you got $500 that's sitting in the stock, and that's what he means playing with the house money. Because now you can just let that sit, and if it goes up, it goes down. You're not as concerned because of the simple fact that you've already locked in profits.
Yeah.
So that's kind of what happened, because I still have like half of my Naked left too. It's still up because I think both of us bought in like we was on the phone, like 70, 80 cents a share. Yep. Like, I still have half of mine too. So I'm still up, but it's kind of like, well, whatever happens, happens.
Exactly.
Right. So like, what did he say? He said Nokia, or him or her said Nokia.
Well, Nokia, I'll probably just wait to see what happens in that one, because
Nokia got crushed.
Nokia made a little move and then really got smacked in the face. It turned right. It never got up there.
Yeah, it had a little glimpse of excitement, and it just got crushed. It went right back to where it was.
Yep.
Crushed. Now, I will say this about Nokia though. Nokia is a 5G stock company.
Yep.
So
even BlackBerry too.
BlackBerry, and Ericsson. So if you believe in the future of 5G, Nokia is actually one of the plays. Just do your research around it. And then what was the other one? He said AMC. Now AMC, man.
So the thing with AMC is that, like, the volatility is super crazy.
It's high.
When I talk about volatility, you can see how fast the stock moves. It goes from $400 down to $200 for the blink of an eye. If you're smart, if you know how to trade the market and you're fast with your execution, when it drops like that, most often it bounces off and then take off again. So if you know what to do, which most people don't, because they're chasing it, trying to buy it and see it going up. You wait when it drops, you get in and you squeeze up, you sell. That's how you play those kind of stocks. Because at this point, I'm not holding AMC. I'm just trading it and taking my profit and getting out and waiting for another opportunity. Because I mean, as fast as it goes up, it can turn around and go down and never come back up again, or take a long time to get back up there. And so, look at AMC and GameStop. These stocks were trading under was that $5, and
Yeah.
so they're right now playing out of their comfort zone.
Yeah.
They don't belong up there at all.
So
And
AMC is the second company that had been shorted the most. So like that's probably going to hold like GameStop is probably.
yeah,
So right now it's still kind of the same situation with AMC as it is with GameStop. So it's like it's a complicated situation, but like people have been commenting like, I just want to take some risks. Well, hey, then have at it. Just make sure you put money in that you're not afraid to lose.
exactly.
Because there's no guarantee based off of where it is now, unless we come back into Monday, like Sunday night. If you're looking at the pre-market, and Monday, and everybody's like, yeah, we got you, and they just go ham again.
Yeah,
it could go up. But the reason why it's where it is because you got one period where what Robinhood did is froze, so people couldn't even buy this, which is just stupid. Like, come on, yo, like for real. But then you have a period where it was running up high. So the time that I was in AMC was when it got to $20. So I got in at $4, and I mean it hit 20 like in less than 12 hours, and I was like, hey, as much as I'm about the revolution and the cause,
I'm taking my profit.
I'm taking some profits because I mean everybody is really, you know what I'm saying?
Yeah.
But then now you can see where it's kind of settled. So like we don't really know until like what happens with Monday. But if you're not afraid to risk some money, then you can feel free to put some in if you want. Like, but for the most part, it's just those metrics of understanding that you possibly can lose every single thing that you put in. You won't lose every single thing, but it's just that's the mindset. Like, so the money that we put in, for example, like when I decided to get in the trade, and I don't even trade that much. Like what we did was based off of like, hey, I'm not afraid to lose it. But we could tell by the metrics what was happening. So of course, like we support all this stuff that's happening, like far as on the WallStreetBets side, like the retail investor side. Is what Robinhood did illegal? In layman terms, yes. Will they be charged for anything? Probably not, because they helped save a lot of money from a lot of the big heads and government officials. Like these hedge funds, they hold. So a hedge fund has a pool of money. So they have several investors and several clients. Some of those clients that a lot of these hedge funds have, they're politicians.
Yep.
They're big name people.
Folks in Washington.
There's CNB analysts and stuff like that. So when they lose money, that means that they lose money, even though they already got pretty much a lot of money, but they don't want to lose money. So Robinhood, what they did was, according to the rules, what they did was 100% illegal. They totally manipulated the market. And so like for those that was joining, like what we talked about was how Robinhood allowed people to sell the stock, but they couldn't buy the stock. So that makes the stock go down. So people lost money because of that. You can't buy it, but you can sell it though. Oh, but we're just looking out for the greater good of people. Well, how is that if you're literally making it so people can sell? Like that's shady and it's wrong. And it's market manipulation, and that's what they did. So based off the terms of market manipulation, which is illegal, yes, they actually did what they did was illegal. Will they be punished for it?
No.
We don't think so. However, they got a whole bunch of class action lawsuits, and I seen that they were supposedly like begging for money because people are like leaving the app like left and right now. So
yeah, there's been a crazy exodus of users off of Robinhood. So I want to see the numbers, like how many people actually left the platform. And again, like we talked earlier, the funny thing is, these people go on TV, like the CEO of Robinhood, and is like telling people like we did it because we wanted to protect our customers, and supposedly was supposed to believe that he was doing it for us.
No.
It's like, why are you trying to protect me? Like, I'm not stupid. I'm not dumb. It's my money. I know exactly what I'm doing. Because the way they're talking down on us, like retail investors, like we don't know what's going on. We're
Yep.
so stupid. We're not sophisticated enough. Wall Street is too much complicated for us. So they have to step in and protect us from us.
Right. When everything that happened came from a very smart move that most people don't know anything about, short squeezing. One of the reasons why short squeezing doesn't work is because we never really have enough power to do anything about it. We don't have that type of power to short squeeze. Hedge funds will never do that against each other.
Yeah.
So but in order to make a short squeeze, you need somebody who has the firepower to do that. Well, we've never had it. Well, now we have it. And so that's not it's not a chance. That's a strategic move.
Right.
So they calling us stuff like, like, are we kids and we need to be put in check? And I'm thinking like, man, I've been investing for a long time too, like a lot of people have. Like, just because you losing money, don't start insulting. That's what they did. Yeah, I'm surprised not many people are talking today. Of course. I mean, after what happened yesterday, yeah, it was blatant. They are working behind the scenes to recover loot.
Yeah.
But that's what happened with Robinhood. So that stock that dropped all the way down, when it dropped all the way down, I'm sure the hedge funds were able to start covering some of those shorts. So
well, that's what I'm saying. Like when you go from $500 down to $100, that's a spread of $400. So they covered a lot.
A whole lot.
Yeah. So Becker is asking, how does it work moving from one brokerage to another? All right. Well, good question. Do you want to take that one, bro? Or you want me to take it?
You the one you can take it. You the one that got that video popping about how to transfer money out of Robinhood because they burned you.
Yeah. Well, yeah. So there's two ways you can go about it. First would be you can liquidate your position and then transfer your money to your bank account, and then find a new broker, open your account, and then transfer that money there to trade. So that would be the long way. Then the second way is you can find another broker, and most of them you can transfer from one broker to another. So far, I don't know about the big boys like the Vanguard and the Fidelity, but the small broker, you can go from Robinhood to Webull, to M1 Finance, and vice versa. Like you can rotate between those. So you can choose whichever one you want to go with. Those, to me, that's the fastest way of doing it. But the only disadvantage is that during that period of transfer, you cannot trade. So your money just get caught up, and
Right.
so you have to wait until 5 to 10 business days before you can get that money transferred, and then you can start trading again. So it's totally your call. If you don't have a ton of asset in your account, I just say liquidate and get your money out and get out of there. But if you have anything over, I'll say 2K, then see if you can transfer it, because from Robinhood to Webull, if you have over $2,000, Webull might cover the transfer fee. I don't know if they're still doing it now or not. I have to double check. Or to M1 Finance, they'll charge you like $75 to leave the platform. That's what Robinhood charged me after stealing my money, because I lost a ton of money because their app kept crashing.
Right. Like, I don't think people, like, when he say he lost a ton of money, he lost thousands of dollars. And they tried to give him hush money. Hush money was like a couple coins, a couple dollars, literally a couple dollars. So that's how they were doing. They were asking people, like, we give you this, which was nothing, like under $100. People who lost thousands of dollars, we get them, you give them nothing, but they want you to be quiet. Like, no, bro, give me my money back. Like, the money I lost. So, but yeah, so transferring to another brokerage, it's like, so if you're using like even a bigger one, you would go to the brokerage and you would look to transfer in another account. So, and they would handle the transfer from that particular company to your account. So it could take, a couple of days, it could take 10 days. Or if you want to do like what Mr. V says, like you just cash out everything and just withdraw your money and find whichever app you want to use. Both of our channels, his is Mr. Money Geek. On both of our channels, we talk about, we have reviews and things about all those different companies if you want to check them out to see what you might like, to see what you might be interested in. So before I do that, I saw Tiara's question, which is on the same line. I currently use N1 Finance. I'm thinking about using another one, but not sure which one to use. So I think it's a good idea to have
multiple,
like another brokerage account. So N1 Finance, you can't really like, it's a different type of platform, but it's great for like more portfolio-ish type of investing.
It's actually designed for long-term investing.
Long-term, right? Yeah. So the companies where you can just buy, like if you want to buy other stocks, stuff like that, outside of Robinhood, because we ain't pushing Robinhood. I took them off my affiliate list too.
Yeah, okay, good.
right.
You gotta do that.
I was watching the live stream the other day, and dude had the Robinhood affiliate still in his description, and they torched him for that. But so I was prepared. I said I'm not gonna have. I took that out my thing. But you have Webull, which is another good app. Webull's mostly good. You have SoFi. You have Charles Schwab. You have Fidelity. You have TD Ameritrade. You have, I know I'm missing some other ones, but you have those who are definitely good. They're good ones. Like for me, I have N1 Finance, but I also use Charles Schwab. Charles Schwab is like probably like for my oldest investments that I have.
Mine's in Vanguard.
And like Vanguard. So you have SoFi, which is another good one. However, some of the companies like SoFi, for example, if you make a trade, say if you were trying to make a trade on there, like you don't want day trading. You'd want to do something more short term where you're like buying something and you might be holding it for like, a couple months or something like that, because they don't do real time trades. So, but there's different platforms that are really good. And there's nothing wrong with having two. Like N1 Finance is purely like my dividend play. So I use that a lot. Cash App still got to develop. They haven't developed totally yet, but it's good for beginning, like putting a few dollars in, and they just have to develop their apps on. So Foreign Barber says, so do you think they would do the same thing again? Say if AMC goes up or a different stock, do you think they might close it again to save a company? Because they did it once, it's like a money war, a financial war right now. So we would hope that they wouldn't do it again, but because they did it,
they did it, and nobody said a thing.
And nobody said a thing.
So
CNBC didn't say, "Oh, that was terrible."
Nope.
Nobody said anything.
Or as a matter of fact, CNBC said, "Oh, that was a great interview."
Right. Yo, them people made me so mad the other day. Well, that's why I don't watch them most of the time. I can't do it. They made me mad the way they was talking. But like, yeah, so it's a good possibility that they could do it again. We would hope that our government had a heart enough to say, okay, for real, that was wrong.
Yeah.
We will hope that. But
you know they're never gonna do that, because President is back in 2008. What did men do? It's like, I mean, think about it. You got kids, and your kid do something stupid. It's like, you give him a cookie,
right?
Like you're rewarding them for doing something stupid.
Yeah.
So I mean, it's just crazy. That's why we have to be smart. In as much as you're trying to do the right thing, make sure that you again put yourself in a position not to get hurt so bad. because the market is actually not in our favor.
So naked can naked hit 25 next week? I mean, if it ain't, it's
Let me see where naked
so
finished.
let me look at naked, like, because I still
Yeah,
got.
bring it up. I see where naked finished today.
What am I doing? I wouldn't mind if it hit 25 next week.
Oof, that's gonna make me smile.
Me too. Like, I still got half of that stuff left. Like,
I
if it
know.
hit 25, we gonna do another live stream where we pop in sparkling cider, because
Yeah.
no, like $25, it's a stretch. However, it's just I mean, after just what happened yesterday, it just makes it difficult.
So the other thing I could tell them is like, any of you guys, are you all on that Reddit thread? If you can go to Reddit and join that Wall Street Bet, and just be on there and keep your eye, because that's where the conversation is.
Yeah.
Yeah,
Right.
if you bring it up, just make sure you join it, and you can see, you see the stocks they're talking about, a lot on there. You just keep your eye, and if you see naked on there being talked about a lot, be sure that you're probably gonna pump it.
Yeah. So this is Wall Street Bets right here. It's up to 6.6 million people in the group.
Yeah.
Oh, this stuff about to happen again. That's crazy. So yeah,
Let me see. Let me check. I thought they had a Discord for
it got shut down. Let me see.
completely.
So I don't know. They said they lost it, so I'm not sure. It pops up when you click on it. I know they said they were trying to start a new one. So it pops up when you click on it.
Wow.
So if you go to Wall Street Bets on Reddit,
Mm-hmm.
then what you'll see, Becca, is you'll see that it says right here, a WSB Discord.
Mm-hmm.
Click on that, and then you see if you can join or not. I know they said they was making another one, but yeah, that's how you would
Yeah,
get.
right now, it says maximum number members reach.
Right.
500,000.
Right. So
And right now they got 80,000 people online.
That's the crazy thing. Let me see if I can click into something. I need to find a trade where people are talking.
Yeah, see if you can find, like, if there's like a naked thread, see if they can bring it up, because that's the best way to get that info.
Right. Let me see real quick. Wall Street Bets. This is a spinoff community. So this has been updated a day ago. Let me see if anybody's still in it. God, look at all these comments. See if I can find another one. Let me just go into this. Like, right. So like you see, you can see the numbers moving. I mean, people are in there talking.
Yeah.
Yeah, but that's how you can kind of follow and see what they're talking about, is by you just type in naked up here. And I mean, really, you can look at any trade, but like Wall Street Bets is the one that everybody's like on. So
Yeah, I mean, right now you can't even join it because they've maxed out.
So man, I shouldn't. Oh, here goes a naked lounge. Let's see what they're talking about.
Yeah, I knew naked was going to be out here.
Right. It says 79,000 comments. I think just the one I was in the other night.
Wow. That's crazy.
So I guess because it's late, people not on it like that, but you can see this is what people are saying about it.
Yeah.
Stay naked. Born naked, die naked. Yo, this joint is hilarious, yo.
Vegas is the White House called Robin Hood. Huh.
Right.
I didn't hear that yet. But if they call Robin Hood, we just calling is not enough. Tell us what you told them. What are you gonna do?
Exactly.
Guys, can you just tell did you just call them like, hey, good job, guys? That was great.
Yeah, we'll never know. Nah, Tierra, they're not talking. So here's the funny thing. So I traded naked, right? She's like, when you say naked, are we talking about the juice? So, like, no lie, when I traded naked, I thought it was talking about the juice. And then I went and looked at the company. I was like,
bring it up.
This is not naked. Hold on. So let's look at naked brands. Let me see if I can get to it through the stock.
Naked brand. I think that isn't that a
Naked brands. Listen. Y'all see the picture, right? So it's. I was shocked. This is what naked. This is what naked brands is. I was like, wait a minute. This ain't the juice. Let me get off it for they take them CPMs down. So yeah, it's not the juice.
It's not the juice.
Nah, it's literally a naked company. So they say swimwear. It's swimwear and underwear, right? It's draws. So that's funny. So it said better not let the wifey see the website. So she can buy stuff because we ain't. But no, I was shocked. I was like, oh, this ain't the juice. This is this bras and underwear for men and women. I'm like, oh Lord, I didn't even know. So I don't even know who started naked. Like who started the conversation. Like you can see the naked lounge, like they just going in. I don't know who started it, but yeah, it's not the juice at all.
Nope.
It ain't the juice at all.
It's got nothing to do with the juice.
It ain't got nothing to do with the juice. So I'm not sure who started the whole naked thing, but it ended up in there, and we made a little bit of money from it, I'm
still holding.
Yeah, I'm still holding half of mine too. So we didn't make that Wall Street Bets millions though, but we made a little bit of something.
Yeah.
They said it's somewhere over in Europe.
I've seen Australia. I've seen Ireland. It's all over, so I'm not sure where.
Right. Yeah, it's but see, so one of those things, that's the thing with this type of trading environment. You're not really concerned about what the company does.
Yep.
So like, remember AC? Was it AC? Remember that stock?
Yep.
Remember that stock AC? Remember, and we were just like, why is it going crazy?
Why is it flying?
There was absolutely nothing. It's up at $11. It's ridiculous. So I think what was this, like a month or two ago?
Mm-hmm.
Right. So one day, literally, like, wake up and we see this particular company, AC, like I'm in my Webull app looking like, why is this a top mover? And what is that? What is Arrow Cent? What is that? And the volume is going crazy. And people are trading it left and right, jumping in, jumping out left and right.
Mm-hmm.
If you ask anybody
why
what it is, nobody knows. Nobody knows. So but because the volume is high, so like when you look at stocks, you can look at daily movers. You can look at top gainers, top volume movers, and things like that. People who lost the most, people who made the most. So when we saw this, it was like a couple 1,000% up. So the volume was so crazy. So you could put money in 1 minute and literally made money in 5 minutes. And then people so that's what a lot of people were doing. They were doing that, jumping in and jumping out. And no one knew what this company was about at all. Nobody still knows what this company is about. But this is where it is now.
Yeah.
So with GameStop, AMC, BlackBerry, Bed Bath, a lot of people didn't necessarily care about like the company itself, you know, they just kind of was looking like, you know, I mean, I might as well join the party. And that's kind of how that went. So, but yeah, so you have that stuff happen. So like Naked, like we didn't know what Naked was. But you know, we just knew that the trend for it was going to make money. And it did. Because before this, it was like 70, what was it, like 70,
Yeah,
60,
it was like
something like that.
60, 70 cents.
Right. Because nobody knows what Naked is or Naked does. I don't know if anybody owns any Naked wear, but
Yeah, well, last year, Naked made a move at one point and then pulled back. So that was the first time I traded it last year. I don't know, maybe like if you can pull that chart, you probably see where there was a movement last year. But other than that, I never really cared about the company. And that's one of the things you have to do too, because sometimes when you're trading these companies, you're looking like, hey, what if I get trapped with this particular stock? Do I even know what it is?
right. Nope. And an investing rule is don't buy anything you don't know. A trading rule is making money, make money.
In and out.
You get in and out, and don't get attached. So some of the other companies that were short was Virgin Galactic, Fubu TV. We talked about that.
Yeah.
Like Virgin Galactic, like and nobody really talked about these, but it's definitely on the list. So this is like a 1 month of Virgin Galactic. Man, these hedge fund people are losing a lot of money, and we don't care.
I don't think anybody cares.
I don't care.
I mean, they're just losing just a little bit of what they made last year because they made a ton of money last year.
Yeah, like Fizz. Oh, I heard about Fizz. Nobody really talked about it, but I heard about Fizz. National Beverage Company. Yep. I heard about them too. Yep. See, look. God, that's crazy. Yep. They were 1 too. So you can see where they were like less than a month ago, 78. They went all the way up to 181.
180.
And everyone, they basically went down the list with these things.
Yeah. So it's like Wall Street, we're taking the fight to you.
Yep, that's what it is.
It's great.
It's definitely a war.
It is a war.
So
I'm just sad. I'm looking at some of the companies that are on that short list. I'm like, but why? I'm like, why would Wall Street want to just punish these companies? So they get
it doesn't make sense.
Yeah.
SunPower.
Yeah, Luminar, Workhorse, Inovio. Man, why would you be shorting Inovio?
Right. It doesn't make no sense.
No. Bling charging.
And we didn't even know that they were shorting it.
Exactly. They just go after these companies for no reason whatsoever.
Man, iRobot, I don't think anybody understands how well their business is doing because they've been on just a crazy tear these last couple years.
Yeah.
But look at iRobot. Yeah. Tierra said it seems like a lot to keep up with. Well, you know, you don't have to pay attention to it at all. Like, and this is just like at a glance, like most people don't, unless you're like really heavily into trading like that, especially if you're like a day trader or something, you know, you pay it like, so day trading can make a lot of money, you know, like you can make a lot of money with day trading, but you know, you keep up, but even with day traders, like a lot of people, they don't keep up. They don't watch stuff like a hawk sometimes. They just put in their limits and things like that, or trailing stops and stuff like that.
Yeah.
And going about their day. But like the reason why this is interesting is because, for one, like, we all knew about shorting, but one thing we didn't really understand about shorting was like how crazy, like, just the magnitude of it. The
Yeah.
magnitude, like, we know the magnitude from the money, but like, if you look at this list of companies, so this list right here that you're looking at,
Yeah, I'm surprised Tesla is not on that list.
right? Because they can't do it. They can't. Tesla. They lose against Tesla all the time.
Let
But
me
if
see.
you look at this list, these companies basically are targeted to drive their stock price down. Like, and most of them are up because someone got a hold of it. So it's just topic of discussion right now. But lists like these, they're daily. So that's just the stock market. So they're always finding companies to short. It just came to light, and a lot of people now, they now know about what's happening with it. So, but it's always been like this. There's not
The
new.
thing is, like, even just the whole concept of shorting, not a whole lot of people actually understand it. That you can actually sell a stock that you don't own and then buy it back when it
Right. You
drops.
don't even own it.
Yeah.
That's what shorting is. You don't own it at all. So hedge funds, they're not investors. They don't really hold anything.
Yeah.
So Jax Davison says he wants to get out of Robinhood when this settles down. I'm not sure what your angle is, but like we talked about, like if you wanted to, if you're looking to trade or if you're looking to whatever, or just invest long term. The thing with Robinhood, why a lot of people were attracted to Robinhood, is because their platform is super simple and it's not complex.
Yeah.
Most investing platforms are a little bit complex.
Can you bring up Weibo, for instance?
Webull.
Yeah, just bring up the platform so you can see.
Yeah, I have the
desktop.
I have my desktop up though.
Okay.
So this might be a good example because this the desktop joint.
That's even more complicated.
Yeah, that's a little bit more complicated.
Yeah. But the thing is, like, when we say complicated, it doesn't mean that you can't learn it. But they have a ton of features that can help you be a better investor. And I always think about it. If you want to be the best, then learn the best. So
Right.
Robinhood is good. I would say Robinhood is like kindergarten. You graduate and you got to move on.
Yeah. So
if you're just starting out, you go to Robinhood, and then once you learn a few things, you realize that no, you got to move on. You got to go to college.
Right. So Robinhood is just, that's what makes it attractive because it's super simple.
It's user friendly. Put it that way.
Very user friendly. So that's why people attract to it. It's user friendly, like Cash App is user friendly.
Yeah.
Like Cash App is very distant user friendly. The other apps that are user friendly, like SoFi is user friendly like that. Is you can't do, your trades won't
execute.
It won't execute. There's not real time trades. So it might have a delay to it. It's not no guarantee. But their platform is very simple like that, SoFi. But Webull, one of the things with Webull is, like, I tell people to use Webull even if they don't use the investing platform. Because Webull has all of the information. So Webull didn't used to have a brokerage or investing platform attached to it. It was just something you would get a lot of information. And I always use Webull to help search up information. You can see anything. You can see IPOs coming, everything. So they have a lot of information there and a social platform app to it. And then they added the investing side to it, the brokerage. So it's fairly new, like maybe 2-3 years old. But they're constantly always developing their stuff to make sure they can cater to everyone. They have IRAs now, things like that. So Webull is another good one for that. Now, the only thing with Webull is you can't do any fractional shares. Like in Robinhood, you can. But Webull, you can't do any fractional shares.
Yeah, so, and I think that's going to come pretty soon too.
Yeah, they said they definitely are working on it.
Mhm.
I know both of us are in contact with the people. Like they definitely are working on it. So Webull is one that you can look into. Then I would say depending on your investing strategy, you could look into a company like SoFi. That's fine.
Mhm.
SoFi is just a really solid company, period. But then you can look at your bigger companies like your Charles Schwab's, your E Trades, your TD Ameritrades, your Fidelities,
Your Vanguard.
Vanguards. Now the thing with those is their apps aren't really as developed. They're still kind of behind on their apps, so it's a little bit boxy, a little bit clunky. But as companies, they work fine. So
Yeah.
yeah.
And then with those apps too, they don't have the advantages of pre-market and after hours,
Right.
which is, I mean, it's huge. If you're looking to trade, those are features that you need. Because he was talking about if you see like pre-market movers, like in Weibo, I go in the app. I mean, like when I get up in the morning, like I gotta go check see what's popping. That's where you can find the stocks that's like gapping for no reason whatsoever. You jump in, make some profit, and get out. Just like real quick.
Yeah. So like when I talked about buying Naked brand, Get Naked brand, that was after hours. I never traded it. I never traded it. I never once traded it in the market. I bought
Right.
it at 6 p.m. I traded it like around 7 a.m. and sold out.
Yep.
Um, so like yeah, so you can look into those. And nothing's wrong with trying it out too. Like there's some links in my description that you can try out, even links on Mr. Money Geek's channel too, that you can actually get some free stock from using our links. And all you have to do is try it out. And if you don't like it, then you can go try out another one. There's nothing wrong with doing that until you find what you really, really like,
Yeah.
and what fits you, because everybody has different things that they want. So Jim Denson said, "We green on Monday." Or I guess asking if we green on Monday. They shorten the market crazy. I mean, we'll be able to tell Sunday night.
Sunday night, check out features and see which direction features are moving.
Yeah, like Sunday night, you'll know. I mean, the buzz on GameStop is like, or the buzz on WallStreetBets is like, oh, we just getting started. That's the buzz on WallStreetBets. Like, they still coming.
Yeah.
So
Yeah. Jack says Weibo sounds like a nice deal. Then I'm up for work at 5 a.m. Yep. Yo, like sometimes I get up because I'm in Central Time. Sometimes I get up at 3 a.m. to catch some of those trades. I'll get up at like 3, trade for like 30 minutes, make some money, and go back to sleep. So
yeah, the life of a trader is you get up early. The days that you want to make trades, you get up early.
yep.
So you might not have to, and especially if you understand trading, you put different risk and things in. You don't necessarily have to worry about having to constantly check because you have your sell. You have it where that if it hits a certain amount, it will sell.
Then get you out.
So you don't have to check it because you got those things, those risk protections in. But yeah, so get up early and you can make those trades, because you'd be surprised at the stuff that happens. Something can happen in a foreign market overnight that can affect our market, and you wouldn't know it. So you would get up and just everything would just seem simple. You'd be like, wow, what's going on with the market? So, but that's just to each his own. If you're interested in that, if you want to do that thing, you want to do that, then it's that, Webull's another good option for that.
Yeah.
If they get fractional shares, then they definitely, that's the game over.
And the other thing too, the other thing I like about Webull is that when you get up early in the morning, you can read the news about a particular stock, and you can get in before the market opens at 8 o'clock, because not everybody can trade pre-market. So you buy, and as the market open, it pops you. When people are trying to get in, you're getting out because you got in early because you saw the news. And Webull does a really good job at like giving you all that content, like the news, which is stuff people pay for that, and but Webull gives it out for free.
Yeah. So it's a very robust app. It has a whole lot of information. We have tutorials on our channels. He has another channel too, the Webull Guru channel. But like, yeah, like it has a lot of information, but they're pretty good too. So yeah, because
Again, for the most part, you just try and make sure that you try everyone and see which one you're really comfortable with.
Mm-hmm. Yeah, I mean that's fine. It don't cost you nothing to check them out, nothing at all. You just open it. Don't ever have to put your information in, really, or transfer your money in. Just open it, check it out. Move on if you don't like it. So, so like I have a review of just about every single company on my channel because I checked them out. But what happens is everybody always asks, how do you use these different things? So, yeah, you just check it out, see what you like, what you don't like, and then you go from there. If they have an app with a desktop feature, whatnot. If they don't, stuff like that. Because at one point, like Robinhood didn't even have a desktop feature.
Yeah.
So, man, they just went downhill. I don't even know what's going on with them. So, best bet, I'm dashing out. I'm dashing out with some profit.
That's smart.
Right.
That is smart.
Right. Can you talk a little bit about option trading for beginners? Oh man.
That could be a long conversation.
A long little bit.
Well,
I'll just say this: option trading. So you never actually own the stock. So a lot of stuff that's happening with GameStop, AMC, and all this other stuff is option trading. A lot of people aren't just buying the shares outright. There's a lot of option trading happening. So with option trading, let's say it's like you're I guess you can say you're borrowing the stock in a sense, and really you're holding a contract, and each contract has 100 shares in it. So when you're buying those contracts, you're then making a decision of what price you think is going to hit. Like, is it going to go up? Is it going to go down? I'm trying to say it in the most simplest way because options, there's a strategy.
A lot of strategies. But the most simplified form of it would be options. If you're going up, you buy calls. If you're going down, you buy. If you think it's going to go down, you buy puts.
Mm-hmm.
And so in between that, there's like a whole lot of complications in there. But the basic is, if you anticipate that the price of the stock would go up, you buy calls for that stock, and then you have a strike price that you think it's going to hit that price. If you think it's going to go down, same thing. You buy puts, you have a strike price, you think it's going to hit that price. Right. And then your expiration date comes into play, which determines when that contract would expire. Get Smart was saying, each contract has 100 shares. One advantage of options is that you can get, for a small amount of money, you can own so many shares compared to if you bought those shares outright.
Right.
But options comes to with a lot of risk. I mean, risky than stocks, way riskier than stocks.
So with options, the most you can lose is the money that you put in. So you won't go into debt. Like margin trading, you can lose money and then end up owing money. With option trading, the money you put in, that's the most you can lose. And then if it expires, you get whatever happens when it expires, you lose that. So you can choose, like normally when you do option trading, you'll see the dates to choose are, within a week, all the way up to even some years down the line. So
you can go years.
Right. So years. So a lot of big option traders, they tend to trade by longer dates out. And that's something a lot of people talk about. But so basically that's what you're doing. Also, sometimes if you were to buy something that seemingly is worthless, you might not have anybody that wants to buy those contracts, and it'll kind of, and that means you'll kind of be stuck with it if it's something ain't nobody trying to take or whatever. So it's basically you're just buying a contract, 100 shares if it's one contract, and you're betting against a stock going up and down. So, like I said, if you're betting for it to go up, you play a call. If you're betting for it to go down, you play a put. And that's just kind of like the basic knowledge around it. There are some options. You have a limit when you have to sell before it expires, so it's dangerous. I'm getting hit right now, and is that
Visa?
Your Visa?
Yeah, Visa actually pulled back today because I had some Visa, so it went down under 200.
Yeah, man, I started investing in Visa when they had that IPO. That was several years ago. Yeah. So where were you betting for it to go up? He said you're getting hit right now, so you must have been betting for it to go up because it's definitely early down.
See? Oh, 193. Because last time I checked, it was like 197, 196.
Right. So here's a thing with something like this, for example. I'm gonna go out long on this. So here's 5 years of what it looks like with Visa. Visa is Visa. It's a credit card, right? It's a card. We know what Visa is, right? So where sometimes people may make the mistake is they may choose those expirations at a time where like they probably could have played out like 3 months or 6 months and had a better chance at being able to hit those strike prices. But if you played it at a place where you played it like maybe like a week or two, then, so something like this, you don't really have a chance for it to possibly go up. So sometimes playing it out longer gives you more of a chance to be able to hit your strike prices. And yeah, when you play longer, sometimes it's definitely can be more expensive. And then the other thing right now is with everything that happened with GameStop and stuff like that, like we don't know if
the market is obviously reacting to that too.
Right. So we don't know if this is going to cause us to have some type of, people call it correction. I think we're way past the point of having a correction. I think it just may go down some. Like people may say, "Oh, because of this, we may have a crash." I mean, let's look at the market. Like, let's go to the Dow. Like, it's definitely trended down. But let's put some context to this stuff because we go out a year, right? So we went through a whole pandemic. This is the pandemic. The market went down this low. But look at where we are. Like, we broke records.
Yeah.
We never hit that high. We almost got close to hitting a high here, but we hit it here in a pandemic. So let's go out even further. Like, the more further you go out, you see how the market goes. So it's always gonna have it
goes in waves.
Yeah, it's always gonna have that. So sometimes you use time as to your advantage, so that way that you're not catching yourself in the wrong position. So sometimes using time works out for you in the long run, especially if you're like a long-term investor. Like, you have the advantage of knowing that if I invest in the right companies, through time, they're going to go up. Even if we go through a market crash, for people who understand investing, like with market crashes, when you see a cheaper price on something that's a really good company, that's called a discount.
Yeah,
that's when you go shopping. That's when you buy even more because it's cheaper. So your money is now more powerful. Your money is more powerful than it was when that stock was up. So now your money can buy more of it than less of it when things go down. But I know I just kind of went along with that. But basically, sometimes using time on your hands, like giving yourself some time, can help you in investing and even in option trading. So that's just a little tidbit. But yeah, option trading has some different strategies to it, and you would spend some time working on it. There are some people that I know that do a lot of good option trading content. Let me see if I can find her. See if I can find her real quick. See if I can find her channel.
Yeah, and while you're looking for that, to me, what I've noticed is like the stock market is the only place where when everything goes on sale, people run away. I'm just like, people stand in line on Black Friday to go shopping, to go get a big flat TV, and because it's a discount. But when it comes to the stock market, when things go on a discount, everybody's like running away. It's red. The market is red today, running away. It's like, you got to be excited. That's when you go in and shop, load up with some stocks and just hold it.
Right. Man, why can't I find her channel? I just was like, she's pretty cool with her. Oh, here we go. Now, I'm just letting y'all know we rock with our people. So,
with Fundrise, the same kind of real estate investments.
Okay, so her channel is, let me go pull it up. I guess it's some free promotion, I guess.
Well, I mean, if you're helping somebody get the content that she's looking for.
Right. So Black Girl Stocks. She talks about option trading all the time. That's her big thing. She talks about option trading all the time. So she has some really good content around option trading. So check out her channel too. Look, I switched to Weeble. That's hilarious. But she has some good content around, option trading. So you can go there and check that out too. That might be a little bit helpful on your endeavors of learning option trading. Because I know I don't really talk about it on my channel at all. So I mean, I kind of stick in certain lines. Another person that's good too. We're in the same network. She's in the Elevate network too, and that's I always say it backwards. It's Trade and Travel, and that's Terry. Terry, she's great with trades as well. To the point she helps her people make $1,000 days, but she understands option tradings in and out. She's really good. I actually have a link in my description, like for one of her products, like where I'm partnered with her. So she, it's like an affiliate link.
Right.
But, she's really good with option trading too. So this is another channel that you can check out. Trade and Travel. She knows her stuff. Like the people that I suggested, they know their stuff. You can trust their words. They give out free information. They have courses and stuff like that, but they put out a ton of free content around it. So yeah, those are some areas that can help you. It's another guy, I can't think of his name though, but yeah. So hopefully those are some tidbits that'll help you guys with the option trading. So yeah, man. I mean, it's 12 midnight where I am, so it's like 11 something for you. But this has been pretty fun, man.
Yeah, pretty relaxing.
Yeah, it has. So I guess we're gonna see what happens on Monday.
It's gonna be exciting.
It's gonna be exciting, or it's gonna be just dead. It's gonna be one or the other. It's gonna be one extreme. So I guess we will see what happens. And like for anyone that's really looking to maybe jump in these things, like, just be careful. Take your time, understand the risk. Don't invest money that you're not afraid to lose. Because like I said, like, can't tell you not to jump in when people have made money. Like we've made a little bit of change too. So it's hard to tell people like don't do something when there's money being made, but just understand the risk if you do choose to do that. And the risk is that you could lose most of your money. And if your spirit and your countenance and your heart can handle that, then feel free to, like everybody was on that post, like, I want to play a game. Let's play a game. So yeah. So yeah, we're gonna go ahead and about to close out. Like, bro, is there anything else you want to say? Like,
Well, I mean, for the most part, it's just be smart about it, take advantage of opportunities, minimize your risk. Um, you know,
yeah. How long can Wall Street bets hold on GameStop? As long as they want. See, the people, everybody that's a part of that group, they're not broke. Like, Wall Street might try to make it seem like people broke.
not just broke and stupid.
Broke and stupid. So it's a joke within the group where like Wall Street's getting crushed by retards. So like that's what they be calling themselves. Like, we're retards and we're just gonna crush Wall Street.
Yeah,
So
we're not smart enough.
they're not stupid. Most of the people in there are not stupid. Of course, you have like 3-4 million people added to your group. You have people that may not know a whole lot, but you know, you got people in there, especially after this, they got millions and millions of dollars. So you have people that they have the power to hold on to it as long as they want to. So there's no rule saying that they can't hold on to it for like 6 months if they want to. There's nothing nobody can do about that if they choose to hold on to it. You can't go and cancel out somebody's shares because that's their money. So, yeah. I've been sitting on 6 shares at $95, and I might just hop out and take guaranteed profit. But the FOMO is killing me.
Okay, so see, let me tell you what I do. You see if you have something that works for you.
Yep.
If you 6 shares at $95, and if it's sitting right now, what was that price? 2, 3.
Let me go back.
Yeah, go back. Let's do the math. And then
math.
So, because see, if you see my shirt, it says "Don't be a greedy savage." I'll call you a greedy savage because when you have that kind of profit, take that 6 shares times 95. So 95 by 6 was that 570. That's how much you put it in there. So even if you just sell and take out your 570, whatever is left in there, at least you know you can never lose your initial investment.
Yep.
So that's what's called securing profit.
Yep.
Take out the money you put in.
Yep.
You know, just think about it. Just assume it was a loan. You loan that money out. You made some profit. Take that profit. Take your initial investment out and say, okay, I'll see what happens. Now you can take that 570. You can go play with naked and see what happens too.
Right.
See, so that's how you continue to build a position and continue to make profit and continue to grow your account. But when you just sit on it, because again, with GameStop, we saw it yesterday. Robinhood pushed the stock price from $500 down to $100. What if it just kept going down?
Yep.
Yeah, you would have been the guy that went to the moon and didn't touch it.
And hit the pavement with no parachute. Like, yeah, that's the proper way if you want to take profits. You don't have to always sell out of it.
Yeah, don't completely close your position. Just again, to me, like I have a bunch of stocks that I have right now just because I bought it, made profit, took my initial investment out. It's like, okay, let me ride this one and see where it goes. And sometimes I'll even put a stop loss. I say, okay, I'm willing to risk another, I don't know, $5 off of this. If it goes below that $5, just get me out.
Yep. So your initial investment, 570, like you said, now you're at like about $1,900, $2,000.
Yeah.
So there's nothing wrong with saying, let me just sell like 4 shares.
Yeah.
And then the other 2 you got is valued at like $650. So you still
way more than what you put in.
You have the money you put in, but you just took out like 4 shares. So you just got $1,300 profit that you just made.
Yeah.
So
and now you can take that 1,300 and invest that in something else and just repeat the process. And that's how you keep building, you grow your account.
Yeah.
If you're trying to grow your account faster. But when you see profit, you just sit there, you just keep going up and down, up and down. Again, with risky stocks like this,
you end up losing it.
You can get up to, on Monday morning, and the stock could be trading at $70.
Yep. Just like that.
Yeah. So you got to be now. When you see that money, take some. If not, just take out your initial investment and say, if you guys want to take the money you gave me back to zero, that's fine. But you're not taking my cash down to zero.
Yep. So that's how you play that when you have those big wins like that.
Yeah.
Sure, GameStop is not something emotional for you. Yeah, I should have gotten out when it was hitting that 470, but I got way too greedy. Yep.
See?
Mm-hmm.
No. See, bro, that right there, I wouldn't even say greedy. Excuse me. But I gotta say, like, that was a little bit too much. If you put in 9 to 5, it gets to 470. Like, just name one place where you can put $95 and in less than, I don't know when you bought it, but in less than a week, if you 9 to 5 goes to 470 and you don't think about securing profit, man, that's not right.
So that's when you have to detach yourself emotionally.
Exactly.
And here's the thing. You could sell your stocks now, and because you don't know, GameStop could go up to $1,000. I don't know if that's possible at this point, but I mean, I can't say anything because really it's just where it is now. So it could double, and then you kind of feel like, well, dang, I shouldn't have sold. But no, what you did was fine. You made profits. So that's why we're trading. You have to be careful being greedy. And you want to be, you be smart to make sure, because you got more money than you had when you put it in.
Yeah,
that's fine.
And that's why, like, even you don't sell everything. Like, you don't close out your position entirely. Right. So you say, I'll take out what I put in. So if this then moves on to $1,000, that's fine. I still got some in there.
Yeah,
it's not like it's like, hey, just sell everything and get out. So that's how you have to play, because the market can pretend and act as if, oh, you know what you're doing. And you can get these wins. It can go to $1,000 tomorrow and you sell it and make some profit. You can do that 1, 2, 3 times. Trust me, the market would get you back.
Yeah. I think I'm getting caught up in the hype and totally losing my logical thinking. Yeah, I mean, so I'll say this, like, there's some hype and then there's some reality to it. So so reality to it, like, is this is really happening? Like, the guy that turned 50,000 into 47 million, that really happened.
Yeah, but tell the full story.
But like the idea, or like in that story in particular, like before that he was down like $50,000, like $40,000, $30,000.
Exactly.
So, but it's more so not so much as like, oh, got caught up in the hype. Sometimes you just don't know that that's just what you can do and still be a part of the movement, like, because the movement is to hold it, but you still can take, because everybody's taking some profits at some point. Like, it's not realistic that people ain't, like I was seeing posts where people paid off $20,000-$30,000 worth of school debt. Well, they had to take profits to get that. So it's okay to, sell 4 shares. You got to understand that at the end of the year, you do have to report that stuff. So there are some taxes. But for the most part, like, that's just what it is. So there's nothing wrong with selling those 4 shares, like, and then keeping 2.
Yeah.
I mean, you could sell 5 and keep 1. Like, either, whatever you choose to do, you still gotta win. And you could take, I don't know if you're married, if you got kids or family, you can take like $50 or $100 and go order some pizza or something and kind of celebrate or whatever. But yeah, there's nothing wrong with taking a little profit off the table. It would be the smart thing to do. If you're developing as a trader, one of the things you have to do is detach yourself emotionally from things. When you're investing long term, that's a little different. But when you're trading, like, well, really, you shouldn't have your emotions in anything, really, because you're basically buying into companies and becoming owners of pieces of companies for the trajectory of being able to build wealth for you and your family. But like with trading, it's just like a one-stop shop type of thing. You know, get it, you know, get your wins. Because like you said, if you're not careful, you can hold on too long sometimes. And and then the market will come back. And you be like, dang.
I know.
So, yeah.
And the thing is, the market moves really fast. Bro, somebody's out there impersonating me. Damn.
Yeah, it's crazy. You said somebody's out there impersonating you?
On YouTube.
Oh, you?
Yeah.
Oh. Well, yeah, that comes where people do the you get the comments, the spam comments.
Yeah.
And people be saying, hey, hit my WhatsApp, and they be asking for money.
Well, but like this dude was actually using me. Like it's got my channel name and my picture and everything, like commenting on my
Yeah, that's the new thing. Yeah, they come to my spam thing, and I just and you're just constantly blocking it. Like just constantly blocking it. I get them too. And you know, I just delete them. I try to catch all that stuff. That's like the new thing. And so it's like people asking for money, like, and you thinking it's the person you support on YouTube, and it's not, and they just want money, and they talking about hit me up on WhatsApp and stuff like that, or cash at me and all this other stuff, follow my IG and all this stuff. So
how do you report them? Because I want the channel like completely banned.
Yeah, YouTube's aware. You can report and flag it. And then you just let your viewers know sometimes in videos that, hey, this not me. Because it's become rampant on especially finance channels, I know. Yeah, definitely the smart thing to do at this point, at least get some profit out.
Yeah, no, get some profit out for sure.
Yeah.
Trust me. Even not, you just even take out your initial investment. But I mean, I would say take out some profit too, because all that hard work, you don't want it to just, in case everything goes south, you don't want it to lose a lot of it.
Right. Well, thank you, y'all. I better get to sleep. We do too. We about to cut this off too. You guys go live often? Well, you know, this is actually our first time going live together. Like we met through YouTube some time ago. And you know, I mean, it's definitely something that we can definitely, you know, put some structure around to go live here and there. Yeah. But yeah, this is our first time going live together. We've been talking about it for a minute, but
yeah.
But we regularly post on our channels the same type of information we're talking about. So on a regular basis. So yeah. So Mr. Money Geek, you're on my channel now, Get Smart University. Mr. Money Geek, his link is in my description. So yeah, definitely subscribe to him too. Good info, thank you. No doubt, man. No doubt at all. That's what we hope to do, to bring some experience to the market to kind of help the success continue on in what's happening.
Yep.
So because we ain't against it at all. We just want to help put some structure to help people continue to win in it. You know what I'm saying? And be smart.
Definitely.
Yeah. Because we right there with it. We all about it. But yeah. But all right, bro. I mean, it's after midnight for me. You almost there.
Yeah, 11:30.
Yeah, so we definitely gonna have to get back on and do this again at some point.
Yeah, we can try to get some structure around it so we can get on.
Absolutely. But all right, everybody, thanks for tuning in. Be sure to like and subscribe. Make sure you subscribe to Mr. Money Geek's channel. Check out the links in the descriptions of this video and his videos. And everybody for the replay, thanks for watching. And,
all right, guys. Have a good one.
Have a good one. Have a good night. Peace.